Hey everybody, Jason here. Happy Friday. We did it. We made it through another week. So looking back at the week today, today real quick, we're up $2,900. For the week, we're up 21. So not too much above that little bit of a high there, but um, it's still a successful week. We'll take a couple grand. For the month, up 34,000, and the quarter we're up $61,000. So pretty nice this last quarter, all in all, and looks like it might turn out to be a pretty decent day as well. So I just wanted to go through a few things. One, I did make one play today, which was buying a Tesla 450, no, not 450, sorry, 750 call. Bought it in the morning for 320 and then sold it out for $500. If I would have kept it, definitely could have made some more money, but it was just a pretty quick flip there. Which at the end of the day doesn't really add in much to this, but hey, it's a little bit extra cash. We'll take it. So, a couple things I wanted to get into. Just really simple question asked, and I want to show that for anybody else who it might be helpful for. If you have a put credit spread and it expires somewhere between the two strike prices, so sell a 750, buy a 740, and we can hit a little up arrow and this little up arrow to see exactly what's going on. So our short strike price is 750 here, and you can see, so 750 is where we need to be at max profit. And then in this case, there's $322 credit. So basically we can be down $3 or $3.22 between the two strike prices to where we're break even. And after that, we start losing money, and we don't lose 100% until 740. So just depending on how much premium you received, that's going to determine how or where the break even is going to sit. So that's pretty simple. But normally, like for me, if I was anywhere here as far as strike prices, this thing would be rolled out. There's no way I'm waiting till last minute. And then even if we're pretty profitable and scared on it or anything, I'm definitely like 100% going to close that out before the bell rings, because it could move, a couple dollars in the last 10, 20, 30 minutes, hour, or whatever like that. That would not be worth it. So that's not something that would happen. That's not something that would happen to me. It just wouldn't be in that case. Wow, Tesla pretty much rocketing today. Boy, if I would have kept, I'm just kind of curious, if I would have kept my, if I would have kept that 750, what's that worth now? Bum, bum, bum. Holy jeez. Could have 400 times my money. Oh well. That's alright. We grabbed a couple $100. Moving on from that. My three option plays, three option strategy here, which we were, we're up 17% on this. And I just kind of want to break these guys down so you can see what my strike prices on here are. This is a long haul butterfly, and I want to show you an example of exactly how I use these. I don't generally just open up like an iron butterfly for the same price. That's pretty much what you would do on an underlying that you think is going to stay within a price. But if we look at something like Nike, this is how I would use it. Nike just had a big drop, okay? And I'll use the same thing with Tesla here. And so if I think that Nike is going to, like if this was an overreaction and Nike's going to recover, but I don't know exactly when or exactly how long. But I think, it's going to be back up in these maybe 155 range, somewhere up there, maybe within the month or so. That's when I would use this. So I would go to trade. We could go, it doesn't really matter out how far out you are. You could play these for a long time. They're pretty cheap plays, especially when you're playing them to the upside, but or up or down sides, basically where you're opening them up out of the money. They're going to be cheap. They're going to be high risk, high reward plays. So if we want to give it a few weeks, say October 22nd, what I would do is I buy the 150, buy the 160 in the middle where I'm looking for it to end up. I'm going to sell 2 of those guys. So we have to go in here, we have to go to edit options and put in 2 for the amount that we're going to sell. And then we can look at this profit graph, right? So this only cost me $91 to open. And if we end up somewhere up here, anywhere between, I mean, what, 153, 156, somewhere in there, we can make a couple $100. So that's a 200-300% play on $92, and that's what I've done with that Tesla play. And if we want to look at it a little bit more, we can hop into option strat. All right, so we're going to build. Change our ticker to Nike, not Nikola, thank God. And we'll go up here to the corner, and we are looking at a long call butterfly. This also can be done as an iron condor. So that same 22nd, and we were looking pretty wide, or pretty narrow, I guess. Sorry, compared to what it is at now. So there we go. So now we can kind of see our profit calculator on this. Do I have these guys all right? Yes, I do. So you can kind of see that it's $90 into this little bit higher strike price, and they get cheaper the farther out of the money that they are. So for example, if we thought it was going to rip up to 160, we could move or bounce back to 160, I guess, as the case may be. There we go. And now we need more chart range, which this chart would move. So you can see right now where we're sitting, we would not have any profit, but as soon as the underlying goes back up, or somewhere around the strike prices, that mid strike price, that 160, then we're pretty profitable on this play. So this particular play would cost us $41, and we could be up 100% if it goes up to 160. As you can see, we can go with the actual value. So you can see our $41. If we're up to 160 even a day or two later, we've over doubled our money. And then as time goes on, this profitability window does narrow. So that's generally why I will take profits early, just because those last couple days, if it ends up much higher or much lower than that middle strike price, then it could become worthless pretty quickly. There's kind of always a sweet spot in here where you have a pretty wide range of strike prices or underlying prices where you'll be able to be profitable. So even if we're shooting for that 160 and it's gone up $5 in the course of a couple weeks, you're still doubling your money. So that's when I use them. In my mind, they're pretty simple. You could get into exactly what all these means. It's a debit spread and a credit spread kind of all rolled into one, but I don't think any of that's very important. I think just knowing what happens at what strike prices and kind of what you're looking for, and just having a plan too. I think those are the important things. All right, so hopefully that makes sense. And that's, that $40 play could be something you can consider on something like Nike. But as you guys know, I've been using those mostly on Tesla. I'll also use them on the SPY. Whenever we see, I guess we'll have to go longer than, well, actually this week is a pretty good example. So we were up here, 750s, 760s. We dropped down Monday, and that's when I opened it, you know. I don't think that drop was called for, and then as we recovered, became more profitable. Of course, we opened them up for I believe the 8th of October, so we still have a lot more time on them. But you know, any of these times, so you see it cruising along, you see a big dip, and it also depends on your feeling or what your thesis is. Do you think this drop is just going to be something that'll continue down, or do you think it's a drop that happened because of stupid news or something like that, and it'll just surely recover over time? So that's my theory on those, and that's why most of them do end up profitable at some point. You know, now we're not up a ton, but we still have plenty of time until this October 8th expiration. So now, because we are closer to the 160 or 765 than we are the 755, we're going to start losing value. So when we're right dead nuts, if we happen to be on October 8th exactly right at 755, this would be worth, they would be worth $1,000 a piece. So could be $4,000, but you know, that's probably not going to happen. So hopefully that was a good enough explanation. We can go over that tomorrow during the live stream some more if you guys want, along with anything else. All right, well, we will end it here, up $2,800. Oh my gosh, this may be a 2-video day because I need to roll out all of my put credit spreads. I need to roll out a ton of these. Anyhow, all right, there you go. I'll probably be making one a little bit later today after I get all those guys rolled out, but just wanted to get to those few questions. All right, love you guys. Let's make a lot of money.